Hello friends, welcome to Get Rich with me. My name is Dr. Dima El-Natur. I am your host, and today's episode is going to be about life insurance. There's so much out there about life insurance. I am from Efficient Wealth Group, and I help people level up their financial strategies so they can live the lives that they desire. Now, before we really dive deep into life insurance, you all know that I love sharing high quality financial content because financial literacy is something that we all really need. Now, in previous episode, I covered annuities and I went into the financial instruments of annuities, what to look for and how to shop the market. In this episode, we're going to get into life insurance. And the only reason we're getting into life insurance because life insurance has something very special, which is tax advantages. Now, before we dive into the features of life insurance, we have to compare them to annuities, which I previously covered. Annuities have no cost of insurance. There's no medical underwriting. Life insurance, on the other hand, it's a life insurance product. So there is medical underwriting and there is a cost of insurance. And as you can imagine, if you have a $10 million life insurance policy, it would be a lot more expensive than if you have a $1 million life insurance policy. So the larger the policy, the higher the cost of that insurance. Now, also when we compare annuities to life insurance, annuities has no tax advantage or leverage. Most of the time, they cannot be used as collateral for loans or other things like that. However, life insurance does. There's a tax advantage to life insurance and there's leverage to life insurance. As a matter of fact, there is an entire industry out there that will take life policies and put them as collateral to provide you with loans to fund policy to get a much larger policy. That's called premium financing. Very advanced strategies, and hopefully we'll get to cover this at the end of the episode today. Also, annuities is more of a deferred instrument. So I start an annuity contract today, and years, maybe a decade or two down the road, it's ready for my retirement. Whether it was a growth annuity, a guaranteed income for life, or an estate annuity, it's generally for a future use. However, life insurance, I could start a life policy today and I can immediately start using it. I could leverage the cash value in that policy, I could use the living benefit, and if anything happens unexpectedly, certainly that death benefit is going to be there for my beneficiaries. Now, annuities, in terms of rates of returns, can be fixed, indexed, or variable. So is life insurance. So that is one of the things that are equal among the two instruments. Now, in terms of life insurance, because life insurance gives us really good tax advantages, and if you want to further educate yourself, please go look up the IRS code 7702. It talks about the cash investment or the cash value, which is an investment feature in life insurance policies. It's called cash value life insurance. Usually that's on the permanent side. And it allows you for tax advantages there. So you could actually start a tax-free stream of income really at any age. It doesn't have to be in retirement. Now, the risk of taxation is a big one. So when I talk about life insurance, I can't help but really cover taxation. Did you know that taxes in the US had come to households in the country, people like you and I, individuals, not businesses, in 1913? So in 2024, 2025, this tax code is a little more than 100 years old. It's been around for 100 years. At the very beginning, the tax code started around 7-8%, and not very far after that, still in the early 1900s, it went up to nearly 90%. And people have no clue that that had actually happened in human history. Of course, we have a progressive system, meaning that with each amount of money that you make, the higher the income, that's when you start reaching the higher amounts. But really what drove taxations to be so high, above 50%, 60, 70%, up to 90% in most of the history of the tax code is mainly world wars. So if you go to Investopedia and try to do a search, tax brackets or tax rates in the US or the history of the tax code, you will see the entire chart, and it even gives you correlation between world events and what happened to taxation at that time. Something very, very helpful. So when the world changes around us and there is conflict, global conflict, definitely the taxes will go up. So today, I would argue that at the current tax rate, 37.5 at the high end or 39.5 coming up here as approved recently, is actually an advantaged point in taxation versus before. But when I talk to my clients today, and everyone really, taxation is a big pain point. So it's something to really keep in mind when we're planning for our money and we're talking about finances. We must take into consideration taxes, because if I'm forfeiting a quarter, 25, 30% of all of the money that I have into taxes, certainly I have to save a lot more to be able to have the amount that I want. So it's something that really has to be taken into consideration. Now, the history of life insurance, on the other hand, is the very first type of life insurance had existed since ancient Rome. And it actually came in the form of burial clubs. So people, when they passed, they had a policy that was specifically for last expense, so their families could buy the right material or a plot of land or what's not to bury their loved ones. And so the very first form of it happened this way. Now, in 1518, in the Royal Exchange of London, there was a one-year policy. There was a merchant who noticed that a businessman who noticed that a merchant was owing a lot of people a lot of money. So he went and he actually convinced the people who he borrowed money to pay him a lump sum and said, if this merchant dies, I will give you your money back. So that was actually the very first form in human history of how life insurance came about. Well, at that point, regulations came about because they said you cannot insure anybody that you don't have what's called in the industry insurable interest. So you can insure a child, you can insure a parent, you can insure a spouse, you can insure a business partner, but you cannot insure a stranger. You must have an insurable interest, and there has to be economic impact of that loss of life for you to carry insurance on them. In 1759, that came to the US, life insurance, and it started in terms of term, and it was called whole life. It's actually one of very, very ancient instruments. And then from there, the history or the design of these life policies had evolved. So today there are two main types, term insurance as well as permanent life insurance. On the permanent side, there's whole lives and IUL. And both of these you could have cash value, you could create tax advantages, you could have accumulation of the investments in those policies. So they're really helpful at many, many fronts. And new designs and new features are constantly coming out. Of course, my favorite kind of life insurance is the IUL or the cash value permanent life insurance policy, which is really the IUL because it's associated with the indexes. There's protection from the negative market return from the indexes. There's only step up and preservation. And when I turn to take that money out, whether in a lump sum or as income stream in retirement, there's really no taxation on that. And so there's a lot of advantages to it. Also, these life policies, I would not generally touch a policy if it does not have something called living benefits. So remember that these life policies, this cash value permanent life insurance, is no longer just for when something happens to the person, they lose their lives. It's for who survives them. Absolutely not. It's supposed to be for the individual's life. So when you have living benefits with it, any type of ailments that comes about, you could actually accelerate that death benefit into a payment that the insurance companies will write you a check for, so you can, take care of the additional expenses that comes with illness. Now, in terms of life insurance terms, what are the things that we have to pay attention to when we're looking? The first thing is insurable interest. I could insure a business partner because if I'm in partnership in a business with another person and they happen to pass away or become disabled, their disease or their death will affect the business. And so that life policies will meant to endorse the business a lump sum, either for disability or for loss of life, in which then the business can take care of additional expenses to hire, to recruit, to train, and bring back the revenue that they lost as a result of the lost partner. You can also do it, of course, on any loved ones, children, parents, and spouses. Now, terms versus permanent, we talked about these two. There's cost of insurance. It's not for everyone. If you have a life, you should have life insurance, but many people are not lucky because they don't qualify. We have a lot of people that are born with diseases, unfortunately, and in that case, they really don't qualify. So something can happen and it could really change what we call your insurability. You no longer get approved. Now, in terms of features, there are policies out there that have return of premium. So you pay the premium, which is the cost of insurance, and if you don't need the policy, they can return all of your money in the future. So that's what we call a safety net. There are living benefits. I would not want to carry a policy that does not have living benefits, because then it's not a complete coverage. The indexing strategies in those policies really matter. Also, the cash accumulation value, how is that calculated? How is the interest being credited into the account? Can I turn on a stream of income from that? And how much are the premium payments, and what are the loan features? Can I take it as a variable rate, as a fixed rate? There's a lot involved with those. Also, the quality of the company. And just to let you know, I am a national broker in the US, meaning that I work with all of the carriers. We have a very high quality selection criteria. I dive so deep into every contract, and I only endorse and bring forward to my client the absolute top 1% of carriers. We have carriers that have been around for more than 200 years. So they have been around for a long, long time. And of course, we want carriers that are going to be around for another 200 years, right? To give us all of the benefits that we need. Now, in terms of cash value life insurance, I want you to think of it as an asset. US banks actually carry billions of dollars in cash value life insurance on their balance sheets, and many people don't know that. As a matter of fact, there has been recent regulations to limit how much of that the banks can carry. The latest development in cash value life insurance is premium financing, where we could bring in a bank and they can finance your life insurance policy with no collateral other than the policy. We call that the 5-payment, 5-year retirement plan. So you make 5 payments, 15 years later, you have a fully funded policy with much greater value than what you could fund yourself. Now, I always think in terms of use cases that cash value can be used for anything. Kids' education, buying a new house, buying a business, emergency funds. And it's really, really important to know that I see all the time the GoFundMe campaigns. People have accidents, loss of life. And I always think, why didn't go fund yourself? Why didn't you carry your own coverage, whether it was an annuity with a self-funded pension of a sort to take care of your loved one, or some kind of life insurance coverage that if something is to happen to you, your family is taken care of. I certainly wouldn't want me or my clients relying on strangers funding a campaign if something is to happen to me and my family ends up with a massive financial burden. So please think about that, because a little bit planning goes a long, long way. Again, thank you for joining me today on Get Rich with Me. My name is Dr. Dima Elnatur from Efficient Wealth Group. I am here to help and serve, level your financial game. And you can get in touch with me at 669-888-6925. See you on the next episode.